Welcome back to those of you who was here before when we were boiling frogs. How many was in here when we were talking about? Yes, good. So we had a really, really interesting morning. I guess if no one else was in here, I should say, hi everyone. My name is Hella Bengt-Jorgensen. I'm the Global Managing Director of Board Development at Board Intelligence, and have the pleasure of also being at the World Economic Forum for the Climate and Nature Governance Future Council. And then I got this chance earlier in the week where Jens called me and said, hey, can you be the MC? I'm like, sure, I can be the MC. So you have no clue what you're getting. I have no clue what you're getting. But we're here, and there's one thing that I said, because I've worked in this for many years, and I'm really enjoying all the times we're getting together, talking, and talking, and talking. And I think what we need to do now is not only talk, but actually do. So one of the challenges I set out this morning was that everyone, before they leave today, need to know what are they going to do either differently or more of to move the needle. Based on the last meeting, I suggested we turn up the heat. I think we could do that in here, but I'm not sure that so many think we should turn up the heat outside. Okay, while everyone is doing the huggings and everything here, I think it is time to welcome Barbara. And you're...
I'm hugging you too if you want.
Yes. Well, take it away.
Wonderful. Well, okay. I have been told I have to be close to the mic, so if you see me like this is not because I want to do some exercises here, even though maybe we do that a little bit later, but no. It's such a pleasure to be here with all of you, and thank you for coming back from the lunch break. My name is Barbara Buchner. I am the CEO of Climate Policy Initiative, and it's my pleasure to be moderating this panel here on scaling nature markets. And I'm going to invite my panel up, and you all know where you are supposed to sit, so please join me. I am having here Tony Dalwood, this is the CEO of Gresham House. Thank you so much for being here, Tony. Lily Burge, the Global Policy Lead at Climate Bonds Initiative. Naoko Ishii, the Professor and Executive Vice President at the University of Tokyo. And Markus Repnik, my good friend, who is the Director of the Systemic Observations Financing Facility. And that sounds very interesting. So we have been giving a task, clear task. We will not be only talking, but we will be talking. But we will be trying to come to some very practical ways of moving forward and giving you advice on how we can do that. Just very briefly to set the scene, I think we all know, and we have for a long time really regarded nature as the asset that is unpriced. I think we've seen it being eroded, we've watched it being eroded, but we've not really found a way of valuing it in order to really make it as an asset class for investors. That is changing. I think we see that. This is also why we have this panel here and why the room is full here. So we are starting to see various types of ecosystem services, nature-based solutions, biodiversity that are really able to attract investment. So this panel here is going to unpack why this is happening and how can we really make sure that we are continuing this journey and really turn it into a full asset class that really can attract institutional investment at scale. So I'm excited to get us started immediately here. And Tony, I'm going to start with you. Again, I think, as I said, I think natural capital has often been viewed as just a niche allocation, but we are seeing this changing. I'd love to hear from you a little bit more what this shift is, why the shift is happening, and what we can do to turn it into a real mainstream assets. So over to you.
Good afternoon. My name is Tony Dalwood. I'm Chief Executive of a business called Gresham House, which is an investor. It's an investment manager into natural capital. It's one of the largest in the world. It's a British business. It's the 5th largest in the world by assets under management into natural capital. And within that, we have a very significant forestry business as well, where we're the 3rd largest in the world after JP Morgan and Manunaf. Now, while that's relevant, is of course we're at the cutting edge of where private capital is coming into natural capital. What we've seen over the last 25 years very significantly is an increase in private assets. You've seen that if you go back 25 years, the average asset allocation to private equity was 0. When you talk to allocators now, they will probably have between 5 and 25% in private equity, and then infrastructure and other things as well. So you've got some allocators that are up to 50% in private assets. That's an important dynamic going on behind the scenes as people are looking for alternative sources of return. That's the background when you come to natural capital, because part of this is education. Education that private assets can generate financial returns and can add to portfolio construction benefits. Those are the 2 key things when it comes to looking at natural capital. Forestry has many, many years track record in terms of financial returns, but also the additionality of that. And of course, over the last few years, we've had biodiversity. Again, in the UK, you have a regulated market. We could return to that, again, where biodiversity net gain is a very significant aspect. And we actually own a business called Environment Bank, which has 40% market share of biodiversity credits in the UK. Now, again, the relevance of that is being able to attract private capital. Private capital needs education on these new asset classes, just like they did private equity 25 years ago. People have become comfortable with private equity in the last 10 years, become comfortable with infrastructure in the last 5-7 years, become comfortable with energy transition infrastructure. That is happening now in natural capital. The additionality that you get, of course, within natural capital is evident, and the data provision is important. But the people who are allocating money need to know they can make financial returns, that it can add to their portfolios. And that's things like inflation linkage, which you get in the likes of forestry and natural capital, or indeed lack of correlation with other other asset classes like equities and bonds. It's significant. If you cannot do that, then allocators will not want to look at it. That we've had a lot of rhetoric over the last 10 years around the philanthropic impact nature of it. That has died away a lot as people realise they need to make money. And money is where the financial returns, portfolio construction aspects can come in. There is a lot of data, a lot of good track record on these asset classes, some of these asset classes. And I would encourage that as educating asset allocators in order to look at that.
Can I just follow up a little bit on, you talked a little bit about bonds, about what are kind of some of the financial vehicles or market structures that you have seen evolve that really can attract that interest?
Some of the factors?
Yeah.
So if you have a look at, you can enhance your Sharpe ratios by using things like forestry and natural capital. Sharpe ratio enhancement is significant for any portfolio constructor who's looking for a diversified portfolio. If you have a look at correlation with likes of bonds and equities, again, I'm major on forestry, which is one of the major asset classes. You're at between 0 and 0.0 to 0.4. That's a very low correlation in some of it. And actually, if you go to US forestry, you've got negative correlations with equities and bonds. Really significant points when people are starting to look at the long-term investment in illiquid assets. And I think when you start, I'll finish on this, that you're seeing now across the world. I've talked to people, Australia, New Zealand, Canada, Japan, China. People are at different stages of their understanding of this, but those that are at the forefront of it recognise the portfolio benefits, recognise they're allocating typically between 0 and 5%. And even in the UK, in the last year, we're seeing some of the pools now allocate up to 5% from 0 into this asset class. Of course, it has to go in the factors I mentioned earlier: portfolio construction benefits, financial returns. Otherwise, it won't get through the door, quite rightly.
Fantastic. Thank you so much. You did mention already liquid markets, so obviously we need to, underlying all that, we need to make sure that the markets are liquid. So we need data, we need standards, we need frameworks. So Lily, let me come to you. Obviously lots of experience around taxonomies, around data, about standards. I'd love to hear from you, maybe any lessons from other climate finance areas that you think can be applied to nature finance.
Yes, definitely. So I think, with the climate side, we've seen the role of standardization as being really crucial in driving the market and, frankly, making, green bonds boring, making it really easy to invest. And I think particularly now, the lessons we're seeing from the new developments on resilience taxonomies, I think that's super applicable to nature. Mitigation is relatively easy to measure. It's a sort of, global metrics like CO2 emissions. Resilience and nature are so context specific And so we started developing our resilience taxonomy, and it is so much more complicated for the developer. But for a good taxonomy should be very complicated in the back, but very easy at the front. We liken it to an electric car. Very complicated in the back, but you get in and you drive. That's what we hope, we think we can do with nature standards if you get it right. And I think another thing is that nature's already in taxonomies. Our criteria for agriculture has got nature in it because it's got to, otherwise it wouldn't be good mitigation criteria for agri. So I think rather than waiting for standards for nature, we also want to sort of surface the signal from existing taxonomies and identify here is where we're already investing in nature. It's already in the agri side and the forestry side and some of the built environment side and mitigation. It's already in so much of the resilience taxonomy. And so I think we can sort of, we can get going already without waiting it takes time to develop a taxonomy. So we can get going without.
Absolutely. Don't let the perfect be the enemy of the good. I think really try to build on what is out there. And you're doing a fantastic job at Gamma Bonds Initiative on that. And I think that's really something, again, also others in the audience, if there's other efforts in this area, I think it's really good to connect. I think we don't have time anymore to just wait and see whether there's a perfect standard or whether we duplicate efforts. So let's really try to work together and see how we can make sure that those standards, those taxonomies become better. But Naoko, let me come to you. A fierce fighter for nature since many, many years. We all know that. Certainly someone who has changed the chef, having nature as one of their core priorities. So thank you for that. And you certainly have long argued that economic systems are undervaluing nature. So I'd love to hear from you, how could we make sure that maybe also economic or political voices better value nature and incorporate it in their decision making?
Thank you. Well, the organizer actually warned us that it's not just the talk, but we need to walk. But I really need to talk a little bit about why we have this problem. So it's more like a talk session. Well, the existing economic system really doesn't appreciate the full value of the nature. Also doesn't value the society or the people. But anyway, current valuation system, accounting system, is the old legacy system, which is based on the old good days, where the nature is vast, that we are small, so we can do whatever we wanted, so that then the nature is not a scarce commodity. Now that because under this great acceleration, we become so powerful, and our capacity is exceeding the limit of the planetary Earth. So that's why we see a lot of collision here and there. The thing we need to really do is how to transform our economic system so that we can continue to stay within these planetary boundaries. Then that how to price the nature is exceedingly important to transform our economic system. So that's what Barbara mentioned, that I'm fighting quite long, how to update our economic system so that we don't necessarily have to struggle why the nature getting so small amount of money. So that's a fundamental starting point to me. But that said, we also need to find a way to how to update the economic system, how to get more finance to nature. So together with several allies, and I think that Barbara can be a great ally, we chart the pathway how to get the natural capital on the balance sheet. The balance sheet can be government balance sheet, but I'm talking mostly about corporate balance sheet because that's one way to get more finance to the natural capital. And you can just imagine 5 boxes staircase. The staircase number 1, staircase number 2, it's more like a natural capital accounting, so that identify and assess how much natural capital has an economic value. But the challenge is those value is not really translated into economic decision making. We were stuck there. So there's a huge and long and deeper river between assessed natural capital and translated into the economic financial decision making. How that the financial sector can really integrate those assessed the value into their economic decision making in case of investors or the financial sector. So we need to really employ a few other levers consisting of creating this financial market. And one is, of course, that the regulators, if the regulator can really tell us that what kind of regulation needs to be employed, then that the BIS and the standard, that central bank that stress test, and those are market signals that how we can really need to incorporate the true value of the economic system into our economic decision making. And then, of course, that the credit rate agencies and the insurance companies, those are very important also change makers to shift our thinking. Actually, institutional investors are very lucky one because you always have a longer term, that the time horizon, which not everybody has it. Usually decision making is much shorter, and then that you have much more educated, informed shareholders. So it's much easier to think about how to get the institutional investors' money into the natural capital. But the real challenge is how does much the investors in shorter term horizon and not necessarily shared by this informed or the decision makers, how can they really act on this value of the natural capital? So that is a kind of the challenge we are facing, and that's why that we need to bring this staircase number 4 and 5, that the financial sector, that financial agencies and the Ministry of Finance and central bank and BIS and those people who regulate the market. So these are kind of system change project going forward, and so it's sorry, a lot of talk, but I think it's a fundamental thing, how to update our economic system so that we can align with the planetary capacity. So let me stop here. Thank you.
Thank you so much, Naoko. And we need that passion, and we also need that systems change. I think we all know that. So a little talk is fine. I'm going to take my moderator's program there, but Markus, let me come to you. We heard a lot about the foundations, about the need to change the economic system. Obviously, underlying all that is data, which we know is foundational, particularly to valuing natural capital, as also Naoko had said. But I think what we also see is that many countries that have significant biodiversity or nature are still having issues that they don't have the data. So what can we do? How can you help? What's the role of your institution? And then also, how can we finance that?
No, thank you, Barbara. So as the director of the United Nations Fund on Systematic Observation, I'm looking at nature markets, guess what, from a data perspective, from a weather and climate data perspective. So I want to make 3 points about this data: the importance, the gaps, and the funding. So if you want to grow a market, you need to understand the market. You need to understand the risks of the value of the market, and how actually the market and the value is going to change over time. And for this, you need environmental data with weather and climate data at the heart of it. So in order to predict, prepare, and protect in the context of heat waves, droughts, floods, wildfires, and superstorms, we need data. We need basic weather and climate data. Or to put it simply, without weather and climate data, we are flying blind, and you want to develop a nature market with eyes wide open. So this brings us to the gaps. It took until 2021 standards that the international community decided what are the basic weather and climate data that each and every country must generate and internationally exchange. The good news is we have sufficient data in Europe. The bad news is we have major data gaps in the developing country world. Actually, the 77 SIDS and LDCs generate merely 10% of the foundational data that are required for each and every forecast, which is not only bad for the countries where the data are missing, but bad globally, because for every forecast beyond 3 to 5 days, you need data from across the globe. I'm happy that we have our friend, Dr. Florian Pappenberger, Center from the European Forecast, Director General of the European Forecast Center with us. He can explain this much better than I do. Now, funding. We are a United Nations Fund. We have mobilized $150 million in the first 4 years, all sovereigns. Shout out to Nordic Development Fund, Satu Santala, pioneer funder, which is good, but it is not sufficient. We need more money. And we need the money now because the costs of inaction, according to Lord Nicholas Stern, if we miss this data, $5 billion. Now, in the current situation, it's difficult to generate more public money, so we need to create a coalition of public and private funders of a global public good that generates huge economic returns, but no direct benefit because these data are openly and freely available. And to close, we're currently setting up the Systematic Observation Impact Bond. It was announced in Milan, COP30. We want to be on stage in Antalya in a few months' time with issuing the first bond. We're setting up the bond issuing infrastructure in Ireland. We have already secured initial contributions from funders, but we need more. So it's really, the crux is how do we fund a global public good that underpins, for example, the growth of nature markets.
Right. Thank you so much, Markus. And I'd love actually just to hear from the panelists here very briefly if there are any other innovative or not innovative, boring financial structures that you are aware that can help really to attract the financing that we need. And yes, public finance is going down, but we can use public finance much more effectively and strategically to really unlock other pools of capital. So any other thoughts on financing structures, Toby?
There are things that are working already, and you shouldn't reinvent the wheel, but it takes time. So in the UK, you've got the only regulated market in the world for biodiversity, and it's working. Yes, there's the government's changing every other day here, which doesn't help. But if there's policy stability in that is working. As I mentioned earlier, we've got about a 40% market share, and we've brought in a couple of £100 million sterling in that now already in the last 2 to 3 years, and that is growing. And if there's stability in that policy, that will grow, and it is already making a contribution to the natural resilience of the markets. Now, the people that we are, or the countries we're discussing that with further afield, the likes of Ireland and even Australia, where they've got the nature repair market, they just need to accelerate their thinking and considerations, because if it's working and it isn't costing the government balance sheet anything, they should get on with it. And for whatever reason, I can say this because my mother's Irish and I'm Irish. The British and the Irish have a great relationship, which often, if it comes from Britain, the Irish don't want it. So, but they'll get there, and and they shouldn't need to reinvent the wheel. And I think, if governments can recognise that there are things where they don't have to pay for it and things that are working, they should embrace them and get on with it. And the policy stability that then should flow from that will lead to mechanism structures and private capital going in. If you go to the States, they haven't got a regulated market, but they have a voluntary market in mitigation banking, for example. There are billions of dollars going into that. It's working and it's contributing, and private capital from Europe particularly is going into that. So don't reinvent the wheel. Just start educating LPs about it. And the final point to make, speak the language of LPs, speak their language, then they will understand. If you walk in and say all about, with respect, all of the data and the good sustainability aspects, it's going to turn people into, I can't get through that, my investment committee. I need financial returns. I understand the additionality, but I need financial returns. In fact, I was talking to a US LP yesterday where I briefly mentioned after 5 minutes any sustainability aspects. If you go to the red states over there, you are out the door, right? It was viewed as a dirty word, quote, dirty word, don't mention it. So you have to talk their language. Right, and I think come back to these financial returns and the risk assessment. They want to know about risks. So we are learning, but those are the things that we can accelerate our learnings about.
I couldn't agree more. At CPR, we are running something that's called the Global Innovation Lab for Climate Finance, where we are trying to help entrepreneurs or like fund managers, boutique, niche financial institutions to really develop their ideas into bankable projects. It's called Innovation Lab, but I agree with you. It's not that it means we need new instruments, but we need to use instruments more effectively or use them in areas where they have not been used before. I think there's huge wealth of information, of lessons out there. So let's really make sure that we build on those lessons. And I'm going to open it up now here. I would love to hear from anyone in the audience if there's other lessons from other structures. And Satu, not that I'm going to pick on you, but I might pick on you. No, I will not pick on you. But, or maybe yes. But I think it's really important to just share what is working, where is it working, what are some of the key ingredients that then we can bring back and ensure that we don't replicate and reinvent the wheel. So maybe opening it up for reflections, questions to the panel here, additions on data. No one?
We've been too comprehensive.
I can see there is a question coming up here. There you go.
Not really a question. I'm sort of adding a bit to the what Markus just said. These observations are key to us. You had a weather forecast which was absolutely brilliant for the heat out there. It's only there because we have the observations on the globe to do so, and therefore we need investment into those observations. So just backing up Markus.
Okay, of course I back up Markus, but that's not why I asked for the floor. No, I mean, just I feel humbled to speak or to even kind of intervene because so I'm from the Nordic Development Fund. We're a concessional financier and really looking for opportunities. Where can we try and catalyze action in new areas? And we are, of course, at the moment looking at including nature in a more robust way in our climate finance. But then thinking of how can we engage in a way that then ends up bringing in institutional capital. That's a really big jump. Especially because we work in the most difficult markets, in particular in Africa. And we've, for example, just done a call for proposals for adaptation finance in Africa, and we are looking at, okay, can we include also nature here? Yes, we are finding ways of doing that, but those deals tend to be relatively small in size, and as you say, difficult then to get through the institutional investors kind of filters. So I guess maybe if I pose a question here is what would be your advice for someone like us who are in that concessional finance space and trying to kind of help things happen, that how can we be helpful in making this happen going forward?
Great, thanks so much. And there's one in the back and then one in the front. No.
Oh, you make me work.
Sorry, you wanted to walk. You wanted to walk.
Your order told you this.
Thank you, Nick Haslam, NIAD Advisors. You've spoken as a panel about some of the difficulties in the natural capital market, about illiquidity, data challenges, the largely project-based pipelines rather than reaching scale via securitized structures or what have you. Are we ready for pension funds, insurance markets, for that kind of deep capital market engagement in this sector? Gresham indicates yes, but are we ready to scale yet, or should we be looking at the alternative markets for the time being until you achieve that kind of scalability and standardization? Particularly given that a lot of the capital potential is in the global south.
So one last, and then I'm going to. I think Toby, that was probably to you.
Yeah. Okay.
You're not going to ask for walking the next time in the next panel.
Sony Kapoor, 2 quick points. Back in the day, I used to run perhaps the world's first derivative fund for climate and cross-commodity derivatives, and the data issue was the major binding constraint for us to, so we did deals in India, in Europe, in Latin America, but nothing in Africa. And I mean, the macro point here is the future of biodiversity, natural capital, climate change will not be settled in Europe or with the European Green Deal, but will be determined by what happens or doesn't happen in sub-Saharan Africa, Latin America, South Asia. And so it's not just a fringe point, right? The second point I wanted to make quickly was there is a real risk the way we have gone with climate and blending, et cetera, that we're going to end up once again being a cottage industry. And there's a unique opportunity of the global rebalancing that has begun away from America. In Norway, for example, I used to advise the Norwegian Sovereign Wealth Fund. The fund is looking to reduce its allocation to the US from 53 to 40%, which frees up $250 billion of capital. Now, if we want to benefit from any of that, it's not okay to go with a 10 million, 100 million facility, right? Anything less than a ticket size of $10 billion means we fail to capitalize on the single best opportunity we have to benefit from this large-scale capital allocation. So somehow, we need to address the data issue, we need to make ourselves macro significant, and we need to put ourselves on the radar screen for this rebalancing.
Fantastic, thank you so much. I'm going to go back, maybe Toby, start with you.
Yeah, so many good questions, all right. Norway, sorry, partnerships. Find partners that you can work with, you've got chemistry with, start talking to them, let them educate you, then you to work with them, you'll get solutions, because they will work with you. Obviously, we have partnership, and we've done it since we started this business, and it's important that you have that two-way dialogue in order to understand what you want to understand and for education. So that would be an answer to that. And there are people out there you can get that, not that many, but there are, and this universe is growing rapidly. Coming to the question towards the back, The opportunity is now. If you go back in all asset classes, the more inefficient they are, by definition, the likelihood of alpha, the likelihood of generating excess returns. We're at the start of natural capital, and by definition, you're at the start of inefficient market and an inefficient market. So the opportunity to capture value is now, and to position that accordingly. Again, we can go into some details on that, but those opportunities. I mean, if you look at the biodiversity net gain market, it's highly inefficient, and we've actually had 3 or 4 years. It's only since it started, cash yields well in excess to clients, well in excess of what we expected, double-digit cash yields. So it's inefficient, that all closes, competition comes in. So I think this is a really important point, because that's what's happened to it. Look at private equity, supernormal returns in 2000, 2010, then obviously the GFC, and then it's like, how do you realise anything? The competition in the market is enormous, and everybody's gravitated to scale. So one of the reports is around scale. There is still a lot of scale out there. Of course, it's still a significant, whilst when you're a first in, when we're one of the first in, like some people are now. But there is an opportunity for government policy to provide scale. Biodiversity net gain is an example of that, and to allow planting of trees if that's relevant to some. And you need trees. The economic risk of not having timber is enormous. And if you look at the supply-demand dynamics over the next 30 years, it's a real issue. People talk about energy now front and centre because of the war and energy going around the world, but actually, trees and timber goes into everything economic growth is all about. 50%, 60% goes into buying houses. We know the supply-demand dynamic on houses. So, conclude. And I think there's so much education of LPs who have a 30-year time horizon, who can capture that dislocation in valuation and create alpha. When they understand that and the financial returns that come with it, plus the additionality, it's a fantastic story.
And that's exactly. Naoko, I saw you.
Yeah, it's just because you triggered one of my questions. Because you said timber, right? Forest and timber. The real challenge for natural capital is how can we really appreciate standing forest, not a dead forest. So that needs quite an exercise of that. And can we really measure, and how the investors do appreciate standing forest, those intrinsic values. That is a huge challenge ahead of us. I just want to make that point, and because you mentioned this timber, it's a kind of necessary goods and for the future. But my original response to it, triggered also by two questions, is that you already mentioned maybe huge opportunities in global south, and because they need it, and who really holds the natural capital? It's not Western or Europe, but it's mostly either Latin America or the Southeast Asia or even Africa. So there's huge opportunity there, and they knew it. They are all thinking about how they can really monetize those kind of secret assets. And then we are not really listening to them, unfortunately, yet. But then I was very excited the last maybe 1-2 years that the Asians finally kind of wake up and come up with several instruments. And then the question is how the patient capital can be also utilized with the blended instrument. And they also think about, and somebody already mentioned, those capital nature projects are kind of small by nature, because then all natural capital kind of so context specific, so that they are thinking about how to bring them together and aggregate them together, how to create a platform, and how to reduce the cost of doing one by one projects. So I think there are a lot of thinking, some practical also that proposal are coming out of them, and they are also seeing the Japanese capital market, the mega banks, because they are also all looking for where can we really spend money. So it's a nice combination of the huge capital in Japan and also the huge demand for Asia and a little bit of Africa. One good thing is that we are all thinking about carbonization, decarbonization transition pathway. The nature needs to be a part of this transition pathway. It's not only climate. So that Asians, Japanese too, quite interested in how we can bring this nature aspect into our transition pathway. And then here the UK has this transition financial committee or something like that. That we do have it. Asia started to have it. So it's more like how to utilize those assets to chart the pathway to get the net zero, but also how can we really do that to stop the nature loss. So I think that it's a very good way of public policy and the private come together to chart the pathway and to create a KPI and how to monetize another huge challenge. But I think that there are quite a bright future if we really can work together. I want to come back to you that if you have so much of money, give it to me, that we can create a huge platform.
Good. We have some money here in the front end. No, thank you so much. And I think just on the last point that you made as well, there is some really interesting proposals that came out through COP30 around monetizing nature, forests.
Yeah.
So I think use existing instruments where you can, but I think in the context of thinking how you have a systems transformation, it is good to sometimes, go to the boundaries and kind of think big as well. So I think everyone is certain, and I know that there are some here that certainly are thinking very big, so I think very good points. But we have a few minutes left just for final reflections, so I'm going to make a final round here. And surprise, surprise, what do I want to know? I want to know what you think is the most important ingredient that really can accelerate investments into nature markets. And Markus, I'm going to start
what
with
do you
you.
expect from me? It's data. I want to come back to this gentleman, not only because of the money, because of also of your point, highlighting the significant share of the nature capital or market is actually in the developing country world. I was just checking yesterday, real time, across all Africa, 3 weather and climate data points in terms of radius zones where the balloon's going up to 22 kilometers. In Europe, about 40. So what do we know in Africa about the situation that we need to know also for Europe? So coming back, if we're serious about scaling natural capital and the natural markets, we need to have the foundational data underpinning. Weather and climate data, not the only one, but important part of it.
Thanks so much, Lily.
Yes, I think no surprise from me. I'd say regulation. And like you say, we need the data. It's not just the taxonomy. You need to have the regulatory framework that drives the use of taxonomy, that drives disclosure. We've seen the Convention on Biological Diversity calling for mandatory disclosure against TNFD. We've seen what's happening in climate finance. What moves the needle? Massive regulatory change. You've seen what People's Bank of China's efforts on directing lending towards climate have resulted in 7 trillion green loans, in USD of green loans. That's the sort of regulatory action we need, and that will move massive capital towards nature.
Couldn't agree more. Toby.
It's education of allocators of the risk-return benefits of this asset class. It's once you do that, then you speak their language, and then they realise it's net benefit to them. That's in their interest to get on and invest.
Great. Naoko, please.
Create demand for natural capital. And regulation is important, policy is important. This and how to this transition finance is important because it's not the goes beyond taxonomy. It has to have a longer term view, so that then we really need to work together to make it happen. Yeah.
Fantastic. Well, thank you so much. Let me try to summarize a very rich discussion here and some really good input from the audience. So I think what I've heard here is this opportunity is real. So this is not something that is distant aspiration anymore. This is happening. It's happening because it's triggered by policy, by technology, by economics, but also by public demand, which I think is something really good. But I think in order to really take it to the next level, there's a few things that need to happen. First one, make sure that the capital is ready and interested to move. And for that, Toby, I think you've made the case very clear. You got to make sure that there are returns. You got to make sure that you show how you address the risks, or at least show how you manage perceived or real risks, and really make sure that you speak the language of the investors and bring them in early in the discussions, not at the very end. That's my addition on that. I think there's also, in that context, learn the lessons on which financial instruments are working, and then expand where there's gaps. So I think there's a lot that we can learn. And Sato, actually, I didn't reply to your questions, but there's a lot of lessons on nature-based solutions that came out also through a G20 exercise. So I'm happy to share more on that one. And education capacity, I think that's in the same one. You can only get the investors to the level you need through education and capacity. Second, regulation. For me, policy absolutely leads the way. Without regulation, you will not get the data that then can inform investor decisions. So great point. Third, of course, standards and data. Don't let the perfect be the enemy of the good. I will always remember the EV from this discussion. So complicated in the back and simple in the front. And let's all drive EVs just on at the margins. And then I think finally we just have to have the discipline to deliver the outcomes on the ground and take the challenge that Naoko has given us to help change, transform the economic system, bring all the different players across the value chain, regulators, finance ministers, to the financial sector together to really also create the demand. So I think lasting change begins with awareness, with recognition. We do have that, but it's being carried forward through action, through partnerships. I think that's really important here, and through persistence. So looking forward to taking that to the next level, and please join me in thanking my panel here. Thank you.
Well done. If I may, I would add on a few other. Well, one thing is the accounting. I did the first green account in the world, the first integrated report in the world. If we start getting this into, the other thing is insurance, the insurability of all of this. And then, because I work with board of directors, where are the board members? But I guess we can take that on at a later stage.
I'm on the board.
Good. Well, we put it on your shoulders now. Thank you so much to all of you for that very engaging. No one was asleep, which is quite amazing after lunch. Well done. Thank you all.
Thanks so much.
And now